Hello, everybody, and welcome. Thank you for joining RF today. We're going to hopefully provide some useful information. We're going to talk about that dreaded word inflation. And I'm here in Nassau, Bahamas. My name is David Slatter. I'm the VP of Investments. Also online is Lamar Gorin, who's our manager of our brokerage department in Barbados. And we've designed this presentation around inflation, and it applies to all of us, regardless of the jurisdiction. So, a little housekeeping before we get started. I'm just going to give everybody pulling the presentation, a quick overview of RF and who we are. So, as we know, inflation is here. We're going to hopefully give you some ideas about what you need to know and how you can handle it to some extent. And unfortunately, I think we all share in the strain and stress of this lady pushing that shopping cart up the hill of inflation. We're all experiencing that every week when we go to the food store. Just the standard legal disclosure, and I'll let everybody read every single word. Okay, thank you. I'm glad you finished that. We can send you a copy if you'd like to read it in detail after the fact, but it's just the standard legal disclosure that everybody must show. So who are we? Well, we're a regional investment bank. We focus on wealth management services, and our motto is to help individuals, our clients, create and manage wealth. We're currently in 3 jurisdictions. The first office was opened in the Bahamas in 1997, the second office in Barbados in 2007, and 3 years ago, we opened up our third office in the Cayman Islands in 2019. When you talk about the senior management of RF, we've got over 100 years of combined investment knowledge. We've also got 3 chartered financial analysts on staff, so it gives you prudent, professional, ethical advice. And to date, we've generated, currently we have over $2.25 billion in assets under administration and $1.25 billion in assets under management. Some of the products and services that we offer. We do mutual funds. We have mutual funds in all 3 jurisdictions, brokerage account services in the Bahamas and Barbados, and soon to be added to the Cayman Islands, hopefully. We do pension management business in all 3 jurisdictions, trusts and estate planning in both the Bahamas and Barbados, and we're going to add that to the Cayman Islands as well. Investment management, so that would be managing discretionary portfolios for individuals, managing pension accounts, managing the mutual funds, and we do that in all 3 jurisdictions. And investment banking, otherwise known as corporate finance. This is our team that helps companies raise capital, and to date we've raised just under $2 billion in capital for our clients, primarily in the Bahamas, but also in Barbados, also looking to expand into the Cayman Islands. And I'm going to hand it over to Lamar.
All right, thank you, David. Good afternoon, everyone. So our learning objectives for today, we're going to talk about what is inflation, what causes inflation, why is inflation inflating, what is the impact of your investments, and what role does a central bank play. So next slide, David. So what is inflation? According to the IMF, inflation is the rate of increase in prices over a given period of time. Inflation reduces the purchasing value of money. On a micro level, the price of a given good may go up. For example, a poor coffee crop in Brazil may have caused the price of coffee to increase due to the reduced supply. On a macro level, however, liberal monetary policy or the increase in the price of oil can push the prices of goods and services. This results in inflation for most goods and services like housing, healthcare, cars, gas, and food prices. All of them go up. So if you look at the next slide, you will see how inflation has caused the cup of coffee to increase over time. So in 1970, one would buy coffee for $1 for 25 cents. However, in 2019, that same cup of coffee is now selling at $1.59. So you can see how inflation has increased the same price, the same cup of coffee over time, causing the price to increase. Next slide, David. So what causes inflation? Milton Friedman famously said, he's an economist, inflation is always and everywhere a monetary phenomenon. In that sense, that is, and can be produced only by a more rapid increase in the quantity of money than in output. So where lots of money chases too few goods. Over the past 2 years, global central banks have injected in excess of 10 trillion in liquidity in the financial system due to the pandemic. These same central banks are now determining how much liquidity to remove from the global financial system in order to rein in inflation. However, they have to be delicate, these central banks, so that they don't cause economies to go into recession. Inflation is also a supply phenomena, as we are experiencing with oil prices due to the Western partial embargo on Russia, due to obviously Russia's invading Ukraine, causing oil and gas prices to increase. David, you want to handle the next slide? Why is inflation rising?
Do you see that, Lamar?
Yeah. So why is inflation rising? So central banks and governments injected trillions of dollars in monetary policy, as I mentioned before, pretty much to combat the COVID-19 pandemic. Supply chain disruptions have happened. Obviously, you see a lot of ships on the outside, shipping prices going up, containers going up, and all this is due to the COVID-19 pandemic. Russia's invasion of Ukraine and the supply shock related to commodities. Obviously, Russia and Ukraine are big exporters of oil and gas, nickel and wheat. The rapid rise in COVID-19 cases in China and the bottleneck related to the manufacturing and shipping. Obviously, China is the largest manufacturer in the world. So any lockdowns in China will affect products going out to the entire globe. Also, there is an increase in energy prices, and which fees prices of most goods and services that we use. So if you think about energy prices going up, it means your light bills are going to go up, your supermarket bills are going to go up. Everything that you use, transportation, etc., all of these things are going to go up over time due to inflation caused by the rising energy prices. So David, I'm going to let you handle U.S. inflation and the history and forecast.
All right, thank you, Lamar.
Yeah.
Yeah, I mean, there's no doubt that major events over the last few years have definitely led to significant levels of inflation, as Lamar mentioned. Whether it's COVID and the bottlenecks, whether it's liberal monetary policies by leading central banks, fiscal stimulus by the governments of many countries, including our own jurisdictions and countries here in the Caribbean. So all of that liquidity fed into the system, and a lot of people held on to it and didn't spend it initially, but they're spending it now, and you see inflation as a result. This chart is just to give you an idea of over the last 30 years in the U.S., the rate of inflation. And why I'm focusing on the U.S. is because all three of our jurisdictions, our currencies are linked to the U.S. dollar, which means we import their inflation, which means their monetary policy is our monetary policy. And you can see that in 2021, the rate of inflation in the U.S. was the highest it had been in over this 30-year period. And if you look at the 2022 forecast, it's expected to get close to 6%. So we're talking about in this generation, the highest rates of inflation that we've experienced. If you're under 30 years, if you're in your 20s, this is definitely a new phenomenon to you. So in Q1 of 2022, the consumer price index rose 8%. This is year over year. In Q2, Q3, and Q4 of 2022, CPI is forecast to increase by 7.6, 6.8, and 5.7% respectively. Fortunately, going into 2023, that downward trend is expected to continue. But by the end of 2023, inflation is still expected to be just under 3%, which is above the Federal Reserve of the U.S.'s target of 2%. So still a little higher than the Central Bank of the U.S. would like. But at least we can expect going forward that this rate of inflation will start to decelerate. It's still going to be substantial if you think about it, right? I mean, If the cost of everything you're producing is still going up by 5% this year and 3% by the end of next year, you still need to be smart and factor that into your decision making. So what is the impact of inflation on my cash and investments? Well, as Lamar mentioned earlier, inflation reduces the buying power of cash. So what a dollar buys today, it will not buy a year from now. And the higher the rate of inflation, the less it will buy. So you often see many products that are out there that the manufacturer will reduce the volume of the product, but keep the price the same. And it's not until you actually go to use it, you realize, hold on now, something's changed. And you realize that they pulled a slick one on you, right? They kept the price the same, but they reduced the volume. So that's really inflation, because once again, you're getting less for the same amount of money. A greater proportion of your paycheck must be allocated to cover basic and essential necessities. This will leave you less for investing if you don't do this, right? If you don't trim the fat, you'll have less for investing purposes. Inflation reduces the real return on investments. So if inflation's at 5% and your normal return is 4%, so if you have a bond that's paying 4%, then your real return was a negative 1%. So simply take your return, deduct inflation, and you get your real rate of return, right? So and this person, even though they invested in a 4% security, at the end of the year, their buying power was reduced by 1% because inflation eroded the 4% plus. So in periods of high inflation, usually you see this leads to higher interest rates as central banks attempt to slow down inflation. Rising interest rates tend to reduce the prices of certain securities. So for example, if you've got a bond that has a fixed rate, as interest rates rise, people are going to be willing to pay less for it, right? So the price of that bond tends to be inversely related to rising to interest rates. It also means that you need to look for investments that have some ability to offset some or all of the inflation. You need to look for, say, equities where that company has the pricing power to pass on some of the inflation to the consumer. Granted, you can only do that for so long. Then even those companies have a problem. But fortunately, as we saw in the previous slide, we expect inflation to remain high, but to be reducing over the next, let's say, 3 quarters. Actually, 7 quarters if we go through 2023. So how can you manage inflation? Well, first of all, you need to look at your budget. If you don't have a budget, create a budget. If you need help creating a budget, call RF, because we provide free financial advice and budget services to our clients. So that means you got to become a client. Then we'll give you the free advice, just for the record, okay? So if you have a budget, revisit it, trim the fat. Now is not the time for excess. So even if you feel you're comfortable, you make a good salary, you still need to look at the budget, trim it, save what you can, because we always have unexpected events and expenses that come up. So you want to put yourself in the best possible position to deal with uncertainty. Inflation is definitely an uncertainty because those are forecasts, and as we know, forecasts are not written in stone. Inflation could be worse than is expected. So we can't simply rest on our laurels because we expect inflation to decrease over the next year and a half. Investors should also look at their risk return profile. When inflation is low, you can be more conservative. You can look for lower returning securities that are far less risky. But as inflation rears its ugly head, and inflation is a risk that you need to consider, perhaps you need to look at adding some risk to your profile, your investor profile, so you can get a higher expected rate of return. I'm not saying you go whole hog and go into something highly speculative like cryptocurrency, which is more volatile than the tide. The tide's pretty steady. The waves, sometimes you can get waves that are flat, calm, and next thing you know, you got 10-foot waves crashing on shore. So cryptocurrency is a pretty volatile, speculative investment. Not even an investment, to be honest. Anyway, let's move on. So research investment options that enhance your returns. If you have money sitting in a checking account or savings account earning effectively zero nominal rate of return and a real rate of return of negative, if inflation's at 7% and you're getting 1% on your savings account, your real rate of return is -6. So you need to look for alternative investment solutions. You can look for mutual funds. You can actually look for individual securities. This is where the assistance of a professional investment manager or investment advisor is essential, and RF is here to help. Some examples, as I think I mentioned earlier, you can look for equities that have equities of firms that have pricing power. In other words, they can pass on some of the additional costs that they're incurring onto the consumer, and therefore keep their profit level fairly stable. Also, look for a company that can pay a decent dividend and has the ability to maintain or increase that dividend because they have pricing power. Central banks and what is their response to inflation? Lamar mentioned earlier about central banks raising interest rates as a way to combat inflation. One of the main mandates, if not the main mandate of central banks, is to keep inflation low and steady. This allows the private sector to set budgets, set expectations, and not have that uncertainty that inflation creates. If you look back in the 70s and into the early 80s, when inflation was double digit, it was a pretty volatile financial system, a volatile real estate market, a volatile business market, because it was so hard to estimate what prices were going to be in the future. What projects should I take on? What prices should I charge? And when you don't know what inflation is going to be down the road, it becomes very difficult to make those decisions. So central banks usually combat inflation through their monetary policy. This is like where they raise interest rates, so making the cost of borrowing higher, which means fewer people borrow. That slows down the rate of economic growth, which slows down inflation, hopefully. Also, central banks during the COVID-19 period, they have been injecting cash into the money supply. How do they do that? Well, buying bonds. And then when they buy the bond and hold on their balance sheet, they in effect inject that cash into the marketplace. They're now, the U.S. Federal Reserve is about to end their program of buying back. At one point, they were buying $120 billion of bonds per month. I think they're down to about 20 billion, and pretty soon that's going to end. Then they'll do the reverse. They'll start selling bonds into the market to pull that cash out of the market, right? So once again, trying to slow down the rate of economic growth, trying to slow down an overheated economy so that inflation can be reined in. Earlier, I mentioned that our three jurisdictions, countries, our currencies are linked to the US dollar, which means that we import their inflation, which means that we really don't have a monetary policy that we can implement. We can implement fiscal policy, but in the case of Barbados and the Bahamas, that's very limited because we are highly indebted. And the Cayman Islands has limited ability to do that because as a exact term, but I think because of the connection to Britain, they're limited on what they can actually borrow. So all three of our jurisdictions really have minimal tools at our disposal to fight inflation. So let's hope the U.S. Federal Reserve does a good job, because we're dependent on the outcome that they generate. Some of the key takeaways. Well, inflation is currently the highest it's been in 30 years. So if that doesn't give you some pause for thought, then I don't know what will, because we're talking about very high levels of inflation that this generation has never seen. Fortunately, inflation is forecast to decrease through to the end of 2023, but it's still going to remain very elevated, which means that you need to either create or amend your budget so that you can cut back on excess spending. So like, as some people say, trim the fat, so that you can ensure that you can meet your essential obligations. Also, you can have some capacity to deal with unexpected issues. And then, of course, it's really essential that you meet with an investment professional and plan your strategy. As I mentioned earlier, RF offers free financial planning services to our clients. That includes our pension clients. So if you are an employee of a firm that has your pension with us, then you also qualify for free financial planning. And you need to look for prudent investments with expected returns that may offset some or all of the eroding impact of inflation. Easier said than done, but some do exist. In Barbados and the Bahamas, we do have some equities that have stable revenue levels, they're pretty stable profit levels, and they've historically paid a steady dividend, and in some cases they've been increasing the dividend. So you look for those kinds of investments. And that was it. So at this point, we're going to open up the floor for Q&A. You see our contact information there, and of course, reach out to our RF website, and you can get my contact information, Lamar's contact information. We're more than happy to assist. All right, we have a question here. Decent dividend. What do you advise is a decent dividend? Well, that's a good point. I mean, usually, you know, if the company has a dividend of even just 2, 3, 4% per annum, that's the dividend yield, but you feel that they can consistently pay that and they can continue to pay that during this period of higher inflation, at least you're partially offsetting the impact of inflation. What will usually happen as well, though, is that companies that pay a decent dividend, and if the market expects it to remain steady, that you'll have more and more people looking to buy that stock because they want that dividend. Increased demand for the stock usually leads to the stock price going up. So there's a flight to quality. And if you have quality, then you tend to benefit from some price appreciation plus a stable dividend. You know, all that's assuming all else is constant. But so a decent dividend, when I think of a decent dividend, I think 2.5%, 3% or higher. Some other questions that came up. What would you recommend to someone hoping to retire next year as far as investments, pension strategy? That's a great question. So, well, the first thing I'd recommend is meeting with one of our investment professionals, because, you know, we need to get a clear understanding of where you stand. So, for example, do you still have debt? Do you have a company pension? Do you have an investment portfolio already? Does your jurisdiction have some kind of national pension scheme that you can also get income from? So, you know, you're 1 year away from retirement, so you need to be a little more conservative. So there may be a time to pull back. It's kind of difficult, right? I said pull back from equities, but now I'm also saying now's the time to remain in equity. So it would be, before I can give you any advice, I need to get a clear understanding of your total situation. And don't forget, even after retirement, you know, men and women are living till 80, 85. So if you retire at 65, you've still got a long-term time frame ahead of you. So it's not as simple as saying when you retire, get out of equities, go into fixed income, because if you've still got 20 years before your final day, that's long-term. Not to mention if you plan to leave anything for the next generation, so it becomes very long-term at that point. There's another question. It was that, is the Caribbean economy in a recession? Well, actually, no, the Caribbean economy is not in a recession. Has made a very strong comeback. And Barbados tourism is actually starting to improve as they get more tourists from Britain, primarily. So in the Bahamas is all about the US, and Barbados is primarily about Britain, but also North America. The Cayman Islands, I mean, they're reopening, and I think their tourism sector is picking up, but their real estate sector was booming the whole time. So during COVID-19, and the Bahamian real estate sector did very well. During COVID-19, many wealthy individuals did not want to get stuck in an urban setting if there was another pandemic or it continued. So they looked for real estate in other jurisdictions that had lower tax rates with good IT infrastructure, so they could avoid the lockdowns and still live a quality of life they wanted. So no, we're not in recession. That said, if the U.S. goes into recession, you know, if they sneeze, we catch a cold. So pay attention to what's going on in the U.S. There is a risk that they go into recession. Hopefully that soft landing or that Goldilocks scenario I talked about happens, but keep an eye on the U.S. because what happens there happens in our jurisdictions as well. I see I've got a question from Ms. McDonald. How do we find the equities in the Bahamas? Is there a listing for them? Great question. So we have our local exchange called the Bahamas International Securities Exchange. Every day in the newspaper, you'll see a listing of the companies and what's traded, what the prices are. Also, you can go on the RF website and you can find updates on Bahamian equities. Currently, there's around, I think, 22 equities that trade. Companies that many people in the Bahamas will be familiar with: FamGuard or Family Guardian Insurance, Kalina Insurance, J.S. Johnson Insurance, Commonwealth Bank, Finco, First Caribbean, Bank of the Bahamas. Bahamas first trades Focal. They have the Shell gas stations here in Nassau. AML Foods, who has Solomon's and Fresh Market. And so the number of very well-known entities that you are probably a consumer of that are listed. So another bit of advice I always get is that, own shares in the company that you spend your money at. So you're kind of, in a small way, you're paying yourself, right? Because if you're getting a dividend from them and the share price is benefiting from your patronizing them, why not become a capitalist, become an owner of that company instead of simply a consumer with that company?
Yeah.
Lamar, quick question on Barbados. I know you give a little update on the Barbados exchange and the companies that are listed there as well.
Yeah, no problem, David. So we also have the Barbados Stock Exchange. They also place ads in the newspapers as well as their website, barbadosstockexchange.com. You can also see them on our website, rfgroup.com as well. So we have stocks like Goddard's Enterprises, we have Baiko Limited, which is the ice cream company. We have First Caribbean, we have CBL, the Insurance Corporation of Barbados. We also have property funds. So there's the Aptly Caribbean Development Fund, as well as the Aptly Caribbean Value Fund. Yeah. So we have quite a number of companies. We have Obisco, which is the biscuit company. So we have like 12 to 15 stocks on the Barbados Stock Exchange that pays some very decent dividends. I just say around that 4% range. So better than the 0% that you will probably have on your bank accounts right now that the savings rate is currently at. So we have some good dividend paying stocks, and we also have some good asset appreciation stocks as well.
I think in addition to equities, we've also got preferred shares and bonds that have been issued by companies, not just governments. And many of these issues, pay attractive returns, 5.5% to 7%, depending. And as I mentioned earlier, our investment banking team, they're actively working. They're going to be bringing a number of issues to market during the course of the year, both in the Barbados and the Bahamas. So pay attention or become a client of RF, and we'd be happy to keep you abreast of the developments.
Yeah, definitely.
No more questions? All right. Well, Lamar gave you the details on our website. You have our contact details. If you are a little shy, feel free to reach out one-on-one, and we can answer your questions at any time. So thank you for joining us today. Hopefully this was informative. It's always great to create these presentations because it's an educational process for us as well. Sometimes you relearn what you learned years ago. So thank you for giving this opportunity to re-educate ourselves, share this information with you. Hopefully it was useful. And we look forward to the next time we can have an event like this. Thank you very much.
Okay, bye.
Bye-bye, Laura.